Hello and welcome to today's video. Another day, another interesting protocol on Solana. This time spotlight goes to OnRe Finance. And truly it is one of its kind. It is a protocol that bridges crypto and reinsurance from the real world. Soon I will go into more detail, but first disclaimer. Before we start, disclaimer, nothing here is a financial advice. I'm just one person with a microphone. Always do your own research. At the center of the protocol is ONyc, an on-chain yield-bearing asset backed by real-world insurance activity. Each token represents a proportional share of a regulated, segregated account that is used to underwrite short-duration insurance and reinsurance contracts. When capital enters this account, it is held in a legally ring-fenced structure in Bermuda and can only be used to collateralize reinsurance exposures. In return, the account earns premium income from insurers. If claims occurred, the value of the account is adjusted accordingly, and this token, net asset values, updates to reflect real-world performance. In simple terms, ONyc token does not rely on token emissions or speculative trading activity for its yield. Its returns are driven by insurance premiums generated throughout a regulatory framework that has existed for decades in traditional reinsurance market. Before coming across this protocol, I was not even familiar with the concept of reinsurance. Yet reinsurance sits at the very center of global insurance system. When insurance companies take on more risk than they can handle on their own balance sheets, they transfer a portion of that exposure to a reinsurer. In exchange, the reinsurer receives part of the insurance premium. This process allows insurers to strengthen their balance sheets, smooth financial results, and free up capital so they can continue providing coverage to individuals and businesses around the world. ONyc generates yield throughout two distinct pathways. First comes from reinsurance activity, while the second comes from how the underlying collateral is managed. A meaningful portion of tokens' yield is driven by reinsurance. When insurance companies transfer part of their risk to reinsurer, a corresponding share of the insurance premium is transferred as well. By providing capital that supports this process, ONyc participates in that premium income. At the same time, the collateral backing this token generates its own return. This return is independent of the reinsurance premiums and comes from how the capital is conservatively deployed while it serves as collateral. Together, these two sources combine to form tokens' overall yield profile. Collateral is composed of stablecoins, cash equivalent assets, and yield-bearing components such as staking stablecoins and treasury bills exposure. This example above was taken from OnRe Transparency Dashboard, which can be found on their website. Now on to main risk. So beyond the more familiar risks such as smart contract risk, one important consideration relates to redemptions. When purchasing the tokens, investors should be aware that redemptions may be subject to specific lockup periods, depending on available liquidity. This structure is intentional. In a reinsurance-based model, capital needs to remain readily available. It can be deployed if adverse real-world events occur. Maintaining capital on hand is essential to ensure that insurance obligations can be met when claims arise. As a result, the key risks are tied to redemption timing and exposure to real-world events, such as natural disasters, that impact the reinsurance contracts backing the protocol. Putting the theory aside, the most important takeaway so far is this: we are looking at a protocol that offers yield-bearing tokens, but unlike traditional DeFi, its yield is not generated throughout on-chain trading, incentives, or liquidity games. Instead, the yield comes from real-world economic activity, specifically insurance and reinsurance, which largely insulates it from typical crypto market volatility. This is particularly interesting development as we have already seen companies begin to accumulate Bitcoin as a way to diversify their balance sheets. Products like the one OnRe is building could represent another diversification tool in the future. For institutions and companies looking to reduce reliance on purely crypto-native returns, exposure to real-world yield streams like reinsurance may become an attractive alternative. When it comes how to get involved, there are two main pathways, one designed for institutions and other for retail participants. For institutions, participation requires know your customer or know your business. Retail users, on the other hand, can interact with the protocol using only a standard hot wallet. If you live in an eligible jurisdiction, the process is straightforward. You can purchase the ONyc yield-bearing asset using USDC or USDG, hold it in your wallet, and allow the token to appreciate over time as a yield grows into its value. If you're not eligible to purchase ONyc directly, this is where the flexibility of DeFi comes into play. directly. Throughout partner protocols such as Comin or Loopscale, users can still gain economic exposure to ONyc and earn yield indirectly. This option is also relevant for eligible users who want to layer additional incentives or points from other protocols on top of their exposure. When engaging in DeFi activities, it is important to understand that additional risks are introduced at the protocol level. Each platform comes with its own set of smart contracts, liquidity, and operational risks that should be considered alongside the underlying asset exposure. Lastly, the protocol itself is already compelling, but the addition of a leaderboard certainly adds another layer of interest. While nothing has been officially confirmed, experience in DeFi shows that point-based systems often precede some form of user incentives or an airdrop. At this stage, no rewards have been announced, which suggests that the project is still early in its life cycle. If that remains the case, there may be ample time for users to participate, accumulate points, and gradually climb the leaderboard as the ecosystem develops. Personally, I'm currently farming points throughout Exponent with small position and looping via Loopscale, which earns me points not only for OnRe but for Loopscale also. Okay, this is it for today's video. If you want full written dive on this topic, check my Substack. Also, for more daily insights and market updates, check my X account, or for more educational content, check my website. Like, subscribe as a sign of support, and see you in the next video. Bye.